Hello and welcome to our ongoing series on India at 70. Today we look at the report card of the economy. Clearly, it's a story of two halves, especially in terms of growth. In the first 40 years, the economy plodded at the Hindu rate of 3.5% GDP growth. In the second half, largely since the reforms of 1991, the economy has spurted to a 6% average annual growth, give or take a few percentage points. Likewise, on inflation, while the economy averaged 7 to 8% up until the late 90s, in the last 17 years, inflation has distinctly moderated to an average of 5 to 6%. More interesting is that in the past 5 years, India has perhaps overtaken most of its large emerging market peers in terms of rate of growth of the GDP. In the past 2 years, it has been growing slightly faster than its huge neighbor, China, even as the institutionalizing of inflation targeting in the Monetary Policy Committee seems likely to bring inflation down maybe to a sub 5% level in the next 5 years. The economy has other positives in the form of controlled current account deficit if oil prices are indeed likely to see a secular downturn. Likewise, GST may push up its otherwise terrible tax to GDP ratio from the current abysmal 11%. That said, India's underperformance is very stark in its social indicators. In terms of literacy, it is 25 years behind China. That is, its current literacy is at the level China was 25 years ago. That's according to a World Bank compilation. On life expectancy, India is 19 years behind Brazil and 30 years behind China, says the same World Bank report. So what is the economy's report card after 70 years? And what about the next 10, if not the next 70? That's our question today. And I have an elite panel with me, an erudite panel for sure. Dr. C. Rangarajan, former Reserve Bank Governor, Professor Himanshu from JNU, Professor Ila Patnaik from the NIPFP, and Professor Ashima Goyal from IGIDR. Ladies and gentlemen, thank you very much for joining me. Well, first to Professor Rangarajan, sir. As professor and as policymaker, you have seen the economy and made policy for much of the last probably 25, 35 years. What's first your verdict or grading of the economy on the growth parameter? Do you think we are sustainably going to be at a 6% plus GDP growth pace?
Well, you have very well summarized the developments. In the first 3 decades, after independence, the Indian economy grew only at about 3%. And with population growing at 2% per annum, the per capita income was growing only at 1.5%. There was a pickup in growth rate in the 1980s. And since the reforms, the growth rate has picked up quite considerably. And if you look at it in terms of the performance in the last 15 or 20 years, the growth rate has really jumped, jumped, and we are today rated as one of the highest growing economies in the world. Looking back and looking forward, one can say that as of now, we are operating well below our potential. We had shown in the early decade of that we can grow between 8 and 9%. In the last 4 or 5 years, the growth rate has come down. Even there are some doubts about the new numbers, but we are operating at 2% below the potential. Going ahead, I do believe that we have the ability to grow between 8 and 9%. Our savings and investment rate are adequate or can be raised to such a level which is necessary to sustain a growth rate between 8 and 9%. So I would say that we have the potential, but as you said, and I will comment later on if necessary, that there are aspects of the economy which really need further looking into. There are shortcomings in the economy, as you mentioned, in terms of the social indicators. Reforms themselves do not lead to growth, and growth by itself does not lead to better social indicator performance. Therefore, we need to have appropriate policies to supplement the reform agenda. And that is important in order to ensure a higher rate of growth, sustained higher rate of growth, and at the same time to see that the benefits of growth are better or more evenly spread.
I'll certainly come to that. So shortcomings and reforms needed for a sustainable growth rate. Ila, let me come to you on the inflation front. Clearly, that is showing a moderation if you looked at the first 40, the next 20, and the last 10. Do you think clearly on inflation control there is progress?
The inflation targeting framework that has been set up, the new amendment to the RBI Act, certainly will pave the way for lowering inflation expectations. But usually that takes time. And in any country, you know, when you begin with the inflation targeting framework, it is new. It takes time for that to reach economic agents when they start thinking about how that will shape their expectations. So currently, in terms of its impact on inflationary expectations, we haven't seen all that much, because in terms of RBI's own inflationary expectation survey of households, we do see that that's higher. But I'm very, very optimistic that once, because we have put the framework in place, slowly it is going to start shaping expectations. In addition to that, we have a lot of very volatile prices in food markets particularly, which impacts the headline CPI, which is the number that is being targeted. And that volatility can be reduced only with much more reforms in food markets, in food processing industry, which haven't yet happened. You know, there have been attempts to reform APMCs, there have been attempts to, you know, bring market forces and remove the oligopolistic and oligopsonistic features of the agri-market, but and bring in warehousing, cold storage, and the, you know, the whole works. But those two things, I think, are on track, and though one, I think food markets will take a bit longer, but I'm very optimistic that when we're talking in the medium long-term horizon, our inflation is going to come down.
Okay. Well, so that's actually two somewhat green ticks that we are getting from our panel, that on growth and on inflation, Dr. Rangarajan and Ila are positive. Let me toss those same two parameters to Ashima and then come to the developmental parameters to Professor Himanshu. Ashima, how would you rate India's performance in growth and inflation in the next 5 years, say?
Yes, I think we are well poised to do much better than we have in the past, because some sort of structural changes that can support both higher growth and lower inflation are taking place. And I think that also a little more optimistic than Ila about the inflation targeting, because because I think we are fortunate that oil price rise is going to be capped. And I think that we are seeing some changes on the ground in agriculture, though a lot more needs to be done. Much of a high inflation came from a really high food price inflation and even global border prices. So we are seeing that the commodity prices are somewhat contained now globally. And in the past 4 years, we've had a series of bad monsoons, good monsoons, yet food price inflation hasn't really taken off. And there's some indicators that point towards a glut situation, where what you need is to offer farmers ways to smooth the income or to store it, processing. So if electricity distribution increases, you can have more food processing, et cetera, et cetera. So these factors, I think, will, and we are seeing some productivity increase in the informal, in the smaller enterprises.
Yes.
Larger productivity increase compared to, you know, the organized sector. So that will also cap inflation. And finally, a little bit I want to say on the social indicators. What has really held growth back is that the government went in for this large subsidization program because we had so much poverty. But and we had a very heterogeneous electorate, so they were happy with those sort of handouts, and they were not very effective at all. And it really brought down our growth rates and prevented the building up of human capital. Most democracies, you really have a much better provision of education, health, because that is what the people want. I think we have reached a level where this is what the electorate wants, and therefore politicians are giving it more and more. And that promises, very well for human capital and therefore for future growth on a sustained basis.
Well, actually, you have set up the argument very well for the next set of social indicator questions that I have. Clearly, Professor Himanshu has done a lot of work on that. First of all, Professor Himanshu, are you convinced that agriculture is at least on the mend? We have seen several years in the last 15 of rural distress. Do you think that something is on the mend in terms of better productivity, better food processing? Is the worst chapter of Indian agriculture behind us?
I don't think so. I mean, in a sense, the farmers have done very well, and in terms of our agricultural productivity, in terms of diversification of the crop basket and many other aspects, the farmers have done really well. But unfortunately, it has come with variability. I mean, the kind of vulnerability which is still there in agricultural prices, in the farming community, due to fluctuation in prices because of monsoon and other factors, those continue to be really a problem. And unless we take care of those issues, these vulnerabilities can become obstacles, can become stumbling blocks for realizing better growth prospects. But when you are talking about agriculture alone, I just want to kind of move a little bit to the rural areas. And I think two issues, again, which again coming from the bright spots that you picked up, I mean, in a sense, the lower inflation in that sense, and the point that Professor Rangarajan was making about that we are performing well below potential. One is that the lower inflation, if it is, and that's what the economic survey does point out, that if it is a result of a deflationary trend which is coming out from the rural areas, where the demand has been going down because of the 2 years of drought and some kind of a slowdown in expenditure in the rural areas, then we are likely to have these issues become really a challenge. And I think we need to think about it as to whether the inflation is really because of the prices being controlled, or it is simply because a result of deflationary trends imminent in the economy. I think the second point that is related to that, and I think social sector issues you have already brought out very clearly, that health, education, nutrition and other things will need to be stepped up on a large scale if we want the growth to be sustainable and not to be satisfied with the growth rate only to be achieved in the next 5 to 10 years. And I think the sustainable issue requires social development indicators to be raised to a much higher level. But two other issues which I want to point out, and I think these are already visible in the society, in the economy. And one is the issue of this whole inability of the economy to create enough number of jobs and take along everybody together. And our joblessness is basically now showing itself in terms of various protests, whether it is the Jats, Patels, or various other kind of insecurities that are throwing up the protest. And the second is, I think, the inequality issue. And I think the inequality issue may become really a stumbling block. So I think not only just do we need to kind of take care of the problem of social indicators, but we also look at these broad indicators of what is happening to the growth and how the way we are distributing the growth and how we're including everybody in the process of growth are going to be really the challenge based on which we can think about whether the growth is going to be sustainable in the long run or not.
Well, I take your point entirely on board, and you set up very nicely for the discussion on the social indicators. The Indian Gini coefficient is higher than what it is for Brazil, China, Russia and other comparable countries. That itself is a very big negative. It's not a huge difference. Last numbers, I think, quoted from the World Bank indicate that India's Gini coefficient is 51 compared to 50 and 48 for the other BRIC countries, clearly indicating inequality is an issue. We will discuss India's progress, our need for progress in the social indicators with our experts in a minute after this break.